Folks, today I'm going to answer the question, is it time to move back into solar and EV stocks? Now, over the past few sessions, members of my VIP room asked me whether it's time to move back into these stocks. Now, if you remember, I was really hot and heavy on these stocks from the end of 2020 all the way through the first quarter of 2021. But since that time, it seems these stocks and the ETFs took a big dump below the 200-day moving average and went from being darlings of Wall Street to one of the weakest performing sectors on Wall Street. And the question is whether they will continue moving lower or begin to spike higher once again. Everybody wants to know. Now, to back up a bit, I want to explain the initial reason for the catalyst, and most of it has to do with the rally in the Russell 2000, which began right at the same time we began seeing the rally in solar energy stocks. The reason for the rally was twofold. First, the market began assimilating that Biden was going to win the presidential race immediately after the first presidential debate, which was actually the day the Russell saw its first major breakout move. Now, the markets assumed that if Biden would win the presidency, he would ease up on China, which is a major producer of parts of smaller solar and electric vehicle U.S. companies, and Chinese electric vehicle companies too. And second, the other major factor was Biden's administration revealed a $2 trillion infrastructure investment plan intended to rebuild the country's infrastructure and target the benefits of climate and clean infrastructure investments to disadvantaged communities. The plan would also use the federal government's purchasing power to secure a 24/7 clean power for federal buildings. Biden also affirmed his earlier commitment to move the federal vehicle fleet to electric vehicles. Biden also proposed a $174 billion investment in electric vehicles, aiming at spurring up domestic supply chains, from raw materials to parts to retooling factors to compete globally, and supporting American efforts to make batteries and electric vehicles. The plan also would offer consumers point-of-sale rebates and tax incentives to buy American-made electric vehicles that are affordable and manufactured in America. States and local governments, as well as the private sector, would also have access to grant and incentive programs to build national networks of about 500,000 electric vehicle chargers by 2030. And that was really exciting. But since that time, things have fizzled out in the electric vehicle and solar space. So let's go through some charts and see where we're at now and if it's a time to hold them or fold them or to just run away from electric vehicle and solar stocks. Let's do that right now. Come with me here. All right, folks, we're looking at the Solar Invesco ETF. Ticker symbol is TAN. And as you could see here, now this ETF, just so you know, just so we can kind of look at the profile of it and give you a little indication of what it is, but it seeks to profit from investment results of the Global SolarG Index. And if you look at the constituents, I'm not sure if this one will have constituents. Let's look at this one. As you can see here, it's under the 200-day moving average. This is the iClean ETF. And if you look at the constituents of this ETF, let's take a quick look here. It'll just take a second to load. But you'll see it has Enphase, Plug Power, Xcel Energy, Sunrun, First Solar, all the usual suspects. Ballard Power Systems. Let's see if this one does it as well here. Not so sure this one will show it or not, but if it will, we'll get a peek at it as well. Oh, here we go. Perfect. Enphase Solar, Sunrun, First Solar, Atlantic Sustainable, SunPower, all the usual suspects, all the clean energy, it's all here. And as you could see here, when you look at the interactive charts on the solar ETFs, and the reason I want to look at the ETFs instead of individual stocks is because it'll give us a good indication of how the entire sector looks. It's trading below the 200-day moving average, and it looks weaker, and it doesn't show any signs of life. And if you look at the other ETF, just to make sure it's not a coincidence, and these are both solar ETFs. These are not electric vehicle ETF, because there's something going on here, and I want you to pay attention to this. So notice both under the 200-day moving average. Why are they below the 200-day moving average? One of the reasons is because a lot of traditional energy stocks are rising right now, and we're seeing inflationary pressure for basic materials, which is what is needed to make a lot of these clean energy products. So with clean energy, you have the factor in the fact that they have to pay higher costs to get the basic materials and to produce this material, because cost inflation is high right now on basic materials. My pool man came to me the other week. He was telling me that chlorine prices have doubled. I don't know if you've seen copper, metal. Prices have been going through the roof, and you need a lot of these minerals and a lot of these products, a lot of these basic materials, raw materials, to help make the clean energy. It's kind of ironic, but you need the old stuff to make the new stuff, and they're not doing well because of prices. Also, if we have high inflationary pressure, it tends to make traditional energy go higher, and if traditional energy goes higher, it causes clean energy to typically go lower. So I'm not that bullish on clean energy. But on the other hand, let's look at the EV sector, because we got to consider them as two separate sectors. Not looking bad. Actually, it's near, look at this. This is all-time highs for the KS electric vehicle and future mobility. Let's look at iDrive. Look at that. It just made all-time highs just a few days ago. So the electric vehicle sector is actually looking pretty good. Let's look at the constituents for this ETF. And this is why I wanted to show you charts. I wanted to show you how different the two sectors look. Now, interestingly, the electric vehicle sector is largely tech. And tech is right now rallying because we're seeing some minor deflationary pressure, which is positive for chips, chip prices. It's also positive for overall technology, because technology and interest rates tend to compete against each other. So higher rates, lower tech, lower rates, higher tech. And there's a lot of question of whether the economy is heating up too much too fast. And we may see a little deflation, which is causing the bond market to rally right now. And it's causing tech to rally as well. And it's taking the electric vehicle stocks with them. But the problem is, most of the stocks that are really causing the rise are not really electric vehicle stocks. They're traditional stocks like Intel, Nvidia, Google. They are in the electric vehicle in a theoretical sense, but they're not like Plug Power or NIO that are making the cars. So the way I interpret it is NIO, there's only 2% of NIO in this. And if you look at NIO, for example, that's a straight EV car manufacturing company. You will see, let me just kind of quickly go here, that the stock is not performing nearly as well as the overall index. Notice that it's above the 50-day and the 200-day line. So it's slightly bullish, but it's nowhere near the highs like the cars ETF. So my point is, it's the tech that's really causing these electric vehicle, quote unquote, ETFs to rise. And if you look at the actual stocks themselves, they look a little bit more like a mix between the solar stocks and the tech stocks. So the way I'm looking at it is right now is this. Solar stocks, we're not there yet. We're not even close yet. We need to trade above the 200-day, and we need to trade above the 50-day moving average. And neither of these ETFs are doing it, which leads me to conclude that most of the stocks within that sectors are not doing it either. That's number one. And number two, if you are looking at electric vehicle stocks, and some of them are okay, I would suggest you focus on the bigger tech stocks right now that are somehow related to electric vehicles, because they're showing more upside right now. Like this is the pure XLK. This is the S&P 500 Technology Index. And let's just take a quick look at it. Look at that. It's breaking out. It's near all-time highs. And this is what's causing, this bullishness here is what's causing the tech part of the electric vehicle stocks to rally. So I wanted to explain to you why we're A, seeing a divergence between solar and electric vehicle, and B, what's really driving the electric vehicles ETFs. It's not really the stocks, it's the large cap tech stocks, and they're rallying on their own, as you could see by the XLK. So don't get fooled into a false rally in electric vehicle ETFs. You'd be better off just going into a straight up tech ETF like a QQQ or an XLK, at least for the next few sessions. Hope it helps, and I hope it clarifies and answers the question of whether it's time to jump into either the clean energy, the solar, or the electric vehicle stocks. Hope that helps. Folks, it's unfortunate, but few traders ever get to experience a stress-free life. It's just the way it is. And that's mostly because they're stuck staring at stock charts all day doing this, fighting against inevitable market noise. But thanks to a brand new discovery, every Tuesday at the opening bell, everyday traders like you could know exactly which stocks are most likely to pop that week. And it's as easy as rinse and repeat week after week. Click the link below to unlock this predictable Tuesday morning strategy right now. And make sure, like this video, subscribe to this channel if you're watching on YouTube. I want you to stay one step ahead of the market by being notified, by being the first to be notified when I post my next video. Duh! Have a great day. Bye, everyone.